So I'm going to start the recording anyway. So I am, and just welcome you all here this evening. This is our second presentation evening of the expert track, and this evening we're going to be looking at ecosystems and we're going to be looking at tokenomics. And we've three separate small presentations for you this evening. One is from Simon, and he's going to go through some useful tools when you're looking up ecosystems for particular blockchains and apps. David is going to have a quick talk to us about tokenomics. And then I'm going to give a bit of a quirky example of an ecosystem. So we're going to jump straight in, and we are recording, so everybody knows, and the recording will be available tomorrow up in the course material if anybody needs to pop off or anything early this evening. So Simon, will I pass straight over to you then and we get stuck straight in?
Sounds good. Right, so what I'll do then, I'll share my screen, everyone. Hopefully everyone can see that. All good?
Yeah.
Brilliant.
Good, thank you.
All right, let me just get my screen arranged. Okay, so there's four tools I thought I'd go through for this. A couple of them are very similar, so it depends on your preferences. But I wanted to look at some of the, I suppose, portfolio trackers, stroke, general information sites that give you information on crypto. And some of these you'll have seen the face of them, but you wouldn't necessarily have gone in a little bit more depth, which shows what these can do. Because they're actually quite powerful, and they've got a lot of information that will be really useful if you're researching tokens or coins, or if you look at the crypto market in general, or just anything crypto related. These sites are brilliant. So the four I've got for you are CoinGecko, which is my personal favorite, CoinMarketCap, Masari, and then Dapp Radar. So what I'll do, I'll spend most of the time on CoinGecko. We'll spend about 15, 20 minutes, if that's all right, Paula. Yeah. And we'll just take a look at some of the things that they can do and the general information on them. So starting off with CoinGecko then, it's a really simple site. So it's just coingecko.com. You can either go in there anonymously, or you can actually sign up with an account. Now, I definitely recommend creating an account for it. Firstly, because it's free. Secondly, because it allows you to track your portfolio really easily. And thirdly, they've got a little rewards system on it as well. So if you log in every day, I know most of us that are involved in crypto probably log in about 30 times a day, let alone once a day. You can actually collect rewards for being on the site as well. And you can use those to purchase things like certain NFTs. They do ebooks and stuff like that. So this is the landing page of CoinGecko. There's a couple of bits I'll point out first of all. So at the top, you've got generalized information, and that just shows the number of coins or tokens that are in circulation to the different types of cryptocurrency, number of exchanges, total market cap of crypto, the trading volume over the last day, and then you've got things like Bitcoin dominance and the Ether gas price for Ethereum. So all of that is on there, so you can see that at a glance. Now the next row down is all the different information that you can get from CoinGecko, and there is absolutely loads of it. So I'll skip over these very quickly, and then we'll go into a bit of depth with some of them. So you've got coins, which is information on the different tokens, things like market cap, that type of thing. So all of you should know from that as well that when we look at market cap, there's a couple of different things we'll look at, and I'll pick one of these tokens in a minute and we'll talk about that. You've got the different exchanges for either spot trading, decentralized exchanges, or derivatives. You've got NFTs, and there are two in here. There's the NFT related coins, which ones that you'll see that are actual tokens related to NFT projects. And NFT floor prices, and the floor price is kind of the base average price of an NFT if you're looking to get into it, and I'll show you that in a sec. And then the final few things which are really useful are publications and other resources. and then you've got a couple of bits at the end which are about the mobile app and stuff. And if you're a developer, you can actually link into APIs and widgets and stuff like that. So loads and loads of stuff there. The next row down is just about your portfolio. So we'll start on a standard screen, which is the market cap for the whole of the crypto market. And that will go down to about 100 per page. And you can see on there are 132 pages. So there's loads of stuff on there. And it gives you some base information on the front page. So you've got #1 token you can see on there, which is Bitcoin. It's got the ticker for it, price of it, what it's done within the last hour, 24 hours and 7 days, trading volume over the last 24 hours, market cap, and then you've just got a graph that shows the last 7 days. So it's got that for all of your top cryptos. Now I'll pick Terra because that's been in the news a lot lately. Now what you've got on here, when you're researching your different cryptos and thinking what you want to invest in, the first thing to do is just take a look at this, and it will give you a couple of key bits of information. The first one is the price, and you get that either compared to Bitcoin or compared to dollars, and you can change that. You can add it to your favorites, which allows you to put it into a portfolio, which I'll show you in a second. And you can also set price alerts up for it. And the price alerts will ping you a message if it either goes over a certain price or below a certain price, or you can just do it by percentages. And you can do that in USD or whatever currency you want. So that's quite handy. And if there's a big change, it will notify you, and you can set it up on your mobile as well. And if you do want to forward it on to anyone, you can do that as well. If you want to share it because you think it's an amazing cryptocurrency and you want to tell the world, it's got a share button. So that's that part. On the right-hand side, you've got all the info about it. And I'd highly recommend using this if you are thinking about investing in a project, because what you've got on there is the website, and that'll open the website that tells you all about that particular project. And you'll get to see what type of website it is, how professional it is. Should have things like the team in there. So it'll tell you about the team, and Dave will probably touch on that a little bit later. The white paper, and then you go into things that are a little bit more detailed, like the different block explorers you've got. So if you think about the ones that we looked at in the previous session, when Paula looked at the one blockchain, you've got all of the different explorers you can look at here. Different wallets, these are the main wallets it uses. And then you've got links to all the communities. So again, if you're wanting to get a bit more involved or find out a bit more from people that are actually in this ecosystem or using it, you've got the Twitter page, Telegram, Discord channel, all of that is on there. And then the final few bits, API ID is more for if you're using an API, and that will link in for getting live price feeds. And then you've just got tags. So that's that stuff, which is really useful. The bits down here, and you can hover over the question marks and it will tell you what all of them mean. So I won't go into any depth because all of this is in the material, but you should know the difference between the maximum supply, total supply, and circulating supply. And that's a good measure when you're looking at what potential price action you can get on a token, depending on how much of the supply is actually in circulation. So scrolling down a bit, you've got the price chart. And you can do that over various different periods. So if you look at Terra Luna, for example, and look at the 90-day, you can see peaks and troughs and where it is now. You can also see the long term, which is at the bottom here. Now, I'll go back to 2021. So we'll go from middle of 2021. So you can see back in 2021, this time last year, Terra Luna token around the $3-6 mark, and up at about $100-ish, between $90 and $100. So you can see all of that price action over whatever period you would want, and you can do it in blocks, whatever suits you. And you've also got below that what it's done over the last up to a year. So that's pretty useful when you're looking at the price action on it. The right hand side also gives you a lot of useful information on it as well. So you can see the all-time high of this particular token, which was quite recently, actually 5 days ago, all-time low, and how much it's gone up from the all-time low, where it ranks market cap, and then highs and lows it's had over certain periods. So there's loads of information there. Further down, on the bigger tokens, what you'll tend to get is a bit more information on the project itself. So it will give you, if I click read more, in this particular instance, it will give you a little bit more about how Luna works. Really interesting project if you do take time to look at this as well. And when you go down a bit further, you've got the markets you can actually trade it on and the trading pairs. So it's got the main top ones, but you can see it's on Binance as the biggest exchange trading, all the way down with HIT BTC and then different trading pairs. I won't go into the exchanges bit yet, but you can actually also look up things like different exchanges available. And then right at the bottom, you've got information that relates to that token as well. So tons of stuff just on that one page to get you started. So I said about portfolio. The other thing you can do is you can add them to your portfolio. So if there is a token that you want to follow and you want to see exactly what's happening with it, you've got the opportunity to add it to one of your portfolios. And when you add it, it will give you, I'll add XRP to one. If you click star on it, it will give you the option of creating either a standard portfolio or you can add additional portfolios. So I've created one called Low Cap Gems on here. And then if you go to the portfolio section at the top, you can either look at individual portfolios or you can combine them all. But it's a page because if you're buying and selling tokens or even long-term hodling, this will give you how you're actually doing against what you purchased for. So you can see here with all of my portfolios, the overall balance I've got here. This isn't a real portfolio, by the way. This is an example portfolio. Your 24-hour change in your portfolio, so you can see it's dropped just over 1.25%. And then the total profit or loss for all your portfolios overall. And then it will break it down by your different portfolios. So I've added some tokens in here, and I thought it'd be interesting just to see what you can do when you are tracking them. So if we look at this first one for Terra, what you can see on there is the holding I've got is just over 9,500. I've got 100 Luna on there. And you can see from what I bought it for, compared to what it's actually worth now, I think if I click on that one, it will show transactions. So this is a dummy transaction, but I assumed I bought it in March last year. It was $6.99 a token. I bought 100, and that cost me just under $700. And since then, to today's date, it's actually grown, and I've had a profit of nearly $8,500 just from that one purchase. And you can add, if you sell some, you can add a transaction and you can put what you sold it for, and it will add that and then show your overall balance on top of that. So it's a really, really good way of tracking your portfolio, and you can see what you end up holding and so on. And it will also show things like losses. So if you take this one for Alchemy, for example, you can see on there, I've not done quite so well with that. So I bought Alchemy and I bought 15,000 of them at about 18 cents each, and I've lost 2,200 on those. So that's the current holding value, and you can see all the nasty figures there. So I definitely recommend you use it. It's a really handy tool, and it's not linked to wallets or anything. It's literally manually tracking it as you do things. So that's your portfolio page. The other ones that I'll briefly go through, where I was talking about the coin section, you've got recently added coins. So there'll be new coins that are added into CoinGecko, tend to be smaller cap coins. You'll have different categories. So clicking on categories, you can look at all the tokens related to a specific ecosystem. So quite relevant with what this week's topic is. So if we look at the Avalanche one, for example, that will give you the Avalanche ecosystem coins by market cap. Now, some of these will be bridged ones that are on Avalanche, but you've got all of the different tokens that have been bridged across and how they work. If we go to some of the other sections on here, got the large movers. So you can see the gainers and losers. Now, the only caveat I'd put with this is some of these are really, really tiny coins and very, very low market cap as well. So some of them will be tokens that are potentially meme tokens. So it may be something that you might want to look at, but I'd give that caveat with it. The other things you've got on here are you can have in this section custom tabs. You can add custom tabs if you're interested in a particular ecosystem. So if you're interested in Polygon, and that go into your shortcut bar, and you can see which of the main coins trading on that. So the other bits that I said you can look at on here are exchanges. So again, if you're researching a token, one of the things that might be of interest to you is whether it's on one of the bigger exchanges, and this will allow you to see which of the bigger exchanges. So you can see by far the biggest exchange is Binance and the various exchanges below that. Now, the interesting thing about this is it does have trust scores as well, which tell you things like the reliability of it, the amount of liquidity on it. Because there's nothing worse. If you buy a token, it pumps, but there's no liquidity to actually sell it. Or if you do sell a bit of it, the price plummets because the liquidity is so low that you're selling down to what people are actually trying to sell out for. So that's on there. You've got NFTs. So again, we said NFT related coins. If you're interested in NFTs, you can see the top NFT coins on here. So Axie is one of the bigger ones. Decentraland we've talked about, Sandbox we've talked about. All of those are on here. And you've got an NFT floor price. Now we'll go into this on a different meetup because this will be related to a module later on. And crypto reports. Now this is really useful if you're doing research into ecosystems because the publication section will give you absolutely tons of reports on the cryptocurrency market. So I'll just pull the Q3 report for CoinGecko, and it will give you an absolute wealth of information on the market itself. So if you're doing any research, you'll pretty much have CoinGecko or some of the other exchanges cover it within these reports. Massively useful. And then the final couple of bits on here, if you're researching coins, is you've got a comparison section. You've got a yield farming section. So I'll just quickly go into that. So again, you can calculate things like impermanent loss, APYs, and that type of thing. So again, you can work out an APY if you're staking, following on from a previous conversation we've had, and just see what you'd actually earn minute, hour, right the way through to a year by staking. So all of that stuff is on here, and hopefully will give you a really good resource to be able to delve deep into what the tokens that you're looking at actually do. And the final couple of things on here, I said about logging into the site. You do get a candy for every day you log in, and you can use those to purchase rewards. So you've got a ebook on DeFi, Bitcoin, you've got NFTs, you've got discounts on different subscriptions and stuff. The best thing about this site is, I think I said it, there's loads of other stuff you can go through on here, but I won't do it because of time. But I will just point out, I've gone through CoinGecko. CoinMarketCap is broadly the same. The main difference with CoinMarketCap is there are learn and earn campaigns that allow you to earn cryptocurrency through more depth about a particular token. So they've got Rose token, which is Oasis, at the moment. And they've got a lot of educational stuff on here as well. So if you go into Alexandria, that has an absolute ton of information that you can learn about things like ecosystems, researching tokens or particular projects. And the final two sites, Masari.io, which is a lot of the stuff we've just looked at, but massively more in detail, as you can see on here. So again, it's really picking your poison and deciding which one will give you the information you need. And then the final one, which is quite useful, is Dapp Radar. And Dapp Radar will allow you to pick out individual, if I go here, individual blockchains and look at what the trending tokens are or the different types of token within each of the blockchains. And you can see on there, you've got loads of different blockchains that you can go into. So Phantom, Moonbeam, we've just talked about Oasis, all the way back to the biggies, which are things like ETH, Tron, which I spit as I say, Binance Smart Chain, Wax, and so on. So all of those bits and pieces are on there. But as I said, the main thing was to highlight these for you so you can go and have a bit of an explore. We'll stick them in the group forum. But yeah, hopefully that's been useful. It was a bit of a whistle-stop tour, so apologies for that. But hopefully it's given you a bit of an idea that if you dig under the surface, when you're doing your research, there's an absolute ton of information out there that you can use.
Good stuff. One is just dropped in crypto bubbles as well. If anyone wants to take a look at that as a resource, that's another good one that's been dropped in. Thank you. Okay, then, David, do you want to take over next? This is just the crypto bubbles coming up there. Yeah. Okay, David.
Yeah, thanks, Paula. Yeah, I'm sure you're all familiar with the word tokenomics, but for anybody that's not, it's an amalgamation of the words tokens and economics, the economics of a token. It's become a popular term in the last few years to describe the math and the incentives governing the crypto assets that we trade. And it includes everything about the mechanics of how the asset will work, as well as the psychology or behavioral forces that could affect its value in the long or short term. So projects with well-designed tokenomics are much more likely to succeed in the long term, because they've done a good job of incentivizing you to buy it and hold the token over a long period of time. Whereas projects with bad tokenomics, they're just doomed. People will rapidly sell these at the first sign of trouble. So if you're considering whether or not to buy a crypto asset, understand that the tokenomics is probably the most useful step you can take to make a properly informed decision. For example, I mean, we've got Doges out there and Shiba Inus that they rapidly inflate because it all comes down to supply and demand in the end. In normal economics, the two forces we're most interested in are the supply and demand of any asset. When understanding how these bake into the tokenomics give us a good sense of how desirable a given token or coin could be. So in the supply end, if you got emission, inflation, and distribution. So on the supply side, it's nice to understand the main thing you're trying to figure out is, based on supply alone, should I expect this token to hold or increase its value, or will that value simply inflate away? The token will increase in value if fewer of those tokens actually exist. In other words, deflation. The token will increase in value if more of them exist, inflation. So if you're going to evaluate the supply side, you don't have to worry about things like whether the token has any utility or whether it will generate income for its holders. You really just want to be thinking about the supply and how it will change over time. So the three questions to ask, they're important questions. The questions I ask anyway that have served me well. Number one, how many of the tokens exist right now? Number two, how many of these tokens will ever exist? And number three, how quickly are new ones being released? Suppose we go to the granddaddy Bitcoin. There's 21 million Bitcoin. They're released at a rate that gets cut in half every 4 years or so. We all know about the cycle. Roughly 19 million have already been minted or exist today. So there's only 2 million more to be released over the next 120 years. So in other words, 90% of the supply is already in circulation. And here will only be 10.5% more Bitcoin 100 years from now. So we can safely say that we wouldn't be expecting any serious inflationary pressure bringing down the value of Bitcoin in the future. So we go to ETH. Let's look at ETH. Circulating supply is around 118 million. There's no cap on how many ETH can exist, but ETH's net emissions are recently adjusted via the Born mechanism. So that could reach a stable supply or potentially even be deflationary, resulting in somewhere between 100 to 120 million tokens total. Given that we should not expect much inflationary pressure on ETH either, it could even become deflationary soon with all the later updates that are due to follow. Now, let's look at Doge on the opposite end of the scale. No supply cap. It's currently inflating. I think it's around 5 to 7% per year. So of the three, I definitely expect inflationary tokenomics to erode the value of Doge more than Bitcoin or Ethereum. And the last thing you want to consider with supply is allocation. How many investors hold the tokens? Do a few investors hold a ton of the tokens, which are going to be unlocked soon? Did the protocol give most of its tokens to the community? How fair does the distribution seem? If a bunch of investors have 25% of the supply and those tokens unlock in a month, you might want to hesitate before buying something with this type of tokenomics. Now, what about DeFi tokens? Yearn was one of the main DeFi protocols, one of the first ones that had a fixed supply of 36,666 YFI. There are no emissions and no inflation, so you shouldn't expect the value of one YFI to decrease from any inflationary pressure anyway. Meanwhile, there's Olympus on the other end of the scale. It's an insane inflationary printing schedule. Huge amounts of OHM tokens are being printed every day. So theoretically, you should expect holding on to be a pretty bad bet. But sometimes supply alone is not enough to understand whether holding the token is worthwhile. So it's not that simple, like everything in crypto. But the main considerations for supply, now demand, things can get more interesting. So in demand, I mean, you could go break a few rocks and say, these are the only rocks I'm ever going to put up for sale, have a fixed supply of 10 rocks, zero inflation rate, so they're worth millions, right? No, because no one wants broken rocks. So this takes us down to network effects and game theory and memes, as I say. At this simple level, there's nothing inherently different between my rocks and Bitcoin. Having a fixed supply alone doesn't make something valuable. So people need to believe it has value and that it will have value going into the future. And if you want to know whether a token will have demand side value in the future, you want to look at the ROI, the memes, and again, game theory. So we start with the ROI real quick. Return of interest in this case is not how much you think the token price will go up. It's how much income or cash flow the token is able to generate for you simply for holding it. For example, if you hold ETH, you can stake it to help secure the network once the proof of stake launches in the future. In return for staking your ETH, you get paid more at a rate of, I think it's 5%-ish. Some tokens allow you to tap into the earnings of the protocol they represent. If you hold Sushi, you could stake or earn the Sushi protocol revenue is currently about 10.5, double what you'd be getting for your ETHs. There's another form of ROI. We call it rebasing, and it's similar to a stock split whereby holding a token and staking it, you continue to get more of that token as the protocol inflates in supply. And this is how Olympus works. And that's why the heavy inflation rate is not necessarily the worst thing. You can retain a share of the protocol that you own. ROI is also important to consider because if a token has no intrinsic ROI or cash flows, then it's harder to justify holding it. You have to believe other people's belief and the numbers going up is enough to sustain it. Or you have to believe the meme. It just takes us to memes. And the other reason people might want to hold the token is simply the belief that other people want the token or want it in the future. You can call it fake conviction or memes, or whatever you call it, the machine that generates belief in the growth of the future value is always going to be an important consideration. And how do you evaluate this? Well, everything else in the tokenomics is pretty measurable, but memes, this is one that requires you to just hop in the community and get a feel for it. And there's no really other way. What's the energy like in their Discord, for example? How active is their Twitter? How many followers? Do people make this token part of their identity? How long have people been active in the said communities? Belief in the future value is often one of the most powerful drivers of demand. Bitcoin has no cash flow, no staking rewards, nothing. It's just a belief that it could be a long-term store of value that rivals gold, as people like to say. More ambitious beliefs like definancialization and hyper-Bitcoinization, but it's all beliefs at the end of the day. So while it's tempting to be very analytical, don't discount how far a token can get with faith, as clever memes have a cult-like following. And the third element here to demand what can combine parts of memes, parts, and ROI is called game theory. Now, game theory asks you to consider what additional elements in the tokenomics design might help increase the demand for the token. This is where tokenomics can get complex and is the main area that we probably look at here before we wrap up. We were looking at a couple of earlier for an example, and one that creates an incentive for locking your tokens in a contract, usually in the form of greater rewards, is Curve. I'm sure people are familiar with Curve. Similar to Sushi, you can lock up your Curve CRV as the ticker tokens to earn a share of the protocol revenue. But the longer you lock up your tokens for, up to 4 years, the greater the rewards. In addition, the more tokens you have locked and the longer you have them locked for, the lower your fees when you use all the other parts of the protocol. So you can see that Curve has exceptionally strong incentives and very good game theory around holding its token. You could earn a decent ROI from staking it. You can earn a higher ROI from all other parts of the app. And you can earn the most by locking your tokens up for 4 years, which will dramatically reduces the incentive all around to sell the CRV token. So now that you know the main questions to ask, we'll go through the process of evaluating it. Convex is built on Curve, another app that's actually built on Curve. And it helps you earn a higher yield by aggregating many investors together. So it lets you earn most of the higher yield you will get on Curve if you locked up thousands of CRV for 4 years without having to do the locking yourself. And I have a chart here. Let's see, can I find it? Bear with me. There we go. I'll show you this real quick just to give you a visual of what I'm saying here. So here's the distribution of the tokenomics in this. The investors get 3.3. The treasury gets 9.7. The actual team takes 10%. Obviously, they got to be paid. If you vote on a protocol, you get 1% for contributing the vote, and the holders get 1. Now, the lion's share goes to the miners and to the LP, the liquidity pool rewards. So if you're mining, you're going to get 25% of the total pool. And if you lock these into a liquidity pool, the lion's share, the 50%, goes to the people that provided the liquidity. So that kind of gives you a nice pie chart showing you how that's all sliced up. Any good project with good tokenomics should have something similar. And Simon showed you ways to investigate this earlier. So yeah, combining this, it's easier for you to get an idea of whether this project has incentive to hold or sell, so to speak. So according to CoinGecko, 78.5 million of those 100 million Curve tokens were already created. Means the current supply will deflate by minus 33%. And of these tokens, the vast majority are going to the people using Convex. So it's a very fair distribution, and only a comparatively small amount is being retained for the team and the investors. For comparison, like imagine if Amazon gave away 75% of the stock to people who used Amazon. So there's a fixed supply. The remaining supply has been released at a decreasing rate. Most of the tokens are going to the community. There's a max of 33% dilution from here. So things look good on the supply side. On the demand side, let's evaluate the CVX demand, you want to ask, why would you hold CVX token? So by holding CVX, you get a share of all Convex Finance revenue. That's not a huge amount. It's about 4%, I think. But that's not all, though. You can also lock up the CVX tokens for 16 weeks at a time. And when you do so, you get bonus rewards from various protocols who actually want to reward these Convex stakers. So that only brings your APR up to about 5% at the best from comparing them all. But don't forget, there's bonus rewards from the other platforms thrown in on top of that one as well. So good tokenomics, as you can see. And on top of that, you could also delegate the Convex to other voters in return for bribes using the service Votium, right? We won't get into that anyway. So there's a pretty good ROI on staking CVX. And the value doesn't change. It has a very strong game theory supporting you to hold the token. And since you only if I was makes it pretty good. The memes aren't really strong. It's a bit of a boring DeFi protocol, but it doesn't need to be because cash is flowing, money talks. So Convex has a fixed supply. It's mostly allocated to your community. Most of the tokens are in circulation. There will not be much more inflation. And holding CVX is heavily rewarded via the protocol fees and the other rewards, the token holders that we talked about. So there's less reason to sell if the price ever takes a dip. That's one of the better tokenomics out there, and it's a good example of a good project. All of the pieces come together to design a good, robust incentive system and doesn't rely on fate to prop up the value. So this should give you a good initial foundation to evaluate any projects you come across. And if you read the white paper, you get a good sense of how this is going to be matched in the future for newer projects and what forces will actually drive the demand for this token or cryptocurrency or coin. So the question to keep in the back of your mind isn't necessarily will this appreciate against the dollar, but we touched on this before. How much is it going to appreciate against the likes of Bitcoin, ETH, or Sol, or whatever coins you deem to be good performers? So most crypto assets are highly correlated and do move together. And if you're holding anything besides the big blue chips, it should be based on some belief that the tokenomics and incentives will result in outperforming these base currencies that it's actually built on. So I'm going to leave it at that because we're up to 20 to now, and that's a rough outline. If any of there's any questions, feel free to go for it there.
That was quite detailed, David. Very good. It's actually an awful lot to absorb in what you said there, and I think along with the study material, it'll all fit in. It'll all make sense because I noticed some people there was so much in that. Some of the tokens they wouldn't be familiar with and that. But as you go through the study material, a lot of what's being said by Simon and Dee this evening will just click together and make that little bit more sense. And hopefully what I'm going to show you now will add to that as well and make it click just that little bit more. So I'm going to share my screen. And I have, first of all, I have CoinMarketCap open. And we briefly looked at this with Simon a second ago, but I'm just going to select any coin here. I'm going to select BNB. This is the Binance coin. And I'm just going to let the page load up. Okay, so we have an overview. We have markets. So when the page loads up for a particular coin, you can get a lot of ecosystem information from within the page that isn't tokenomic information as such, okay? So when you go into the coin on CoinMarketCap, you will have these tabs here: market, historical data, project info, wallet, news, social, ratings, analytics, and price estimates, okay? Now, stuff like wallets are a huge part of an ecosystem. Without wallets, people can store and hold coins. So on all of the coins here on CoinMarketCap, if you want to find out what the wallets are, you can just click in here, okay? The news will tend to give you an indication of who their media partners are. So A lot of cryptocurrencies, a lot of layer 1 blockchains will have a media partner. They will have partnered with somebody that they regularly do their media with, and you'll be able to find the media partners within here. So we see there's BSC News, Cointelegraph. There's a good few media partners for BNB. Now, BNB is a large coin, okay? So it is a pretty good example. If you go into their social here as well, you'll find details of basically what they're tweeting, what they're up to at the moment. Ratings, again, these are an asset score that have been given based on different activities. And if you go through them, it'll give you an idea of the strength of the particular token. In this case, this is a B+ strength. Now, what you may be familiar with is the normal financial rankings around the world, and different countries, their bonds will be ranked at different levels. And this is exactly the same type of ranking as that. You'll also find in here little bits of analysis and price estimations, okay? But under wallets, under news, under social, you're able to get information of who are these people's partners, who are the main players in this ecosystem. So you're going to want exchanges, you're going to want media partners, you're going to want NFT partners, you're going to want DeFi partners, you're going to want all these different type of partners building on top of a particular blockchain. Now, as you're going through the study material, a lot of the examples that are shown and the case studies that are kind of shown are layer 1 ecosystems, okay? So we spoke about base layer, we talked about layer 0s and layer 1s and layer 2s in the previous section. And layer 1s they're the blockchains, and anybody can come along and anybody can build on top of a blockchain if you know how to code. And it's up to the developer to choose which blockchain they want to build on and for whatever reason. Now, you can build apps that are on multiple blockchains that are cross-chain or multi-chain, and you can be part of different ecosystems. But when you're spread out, liquidity can be a little bit thinner. Now, one of the examples I'm going to show this evening is not a blockchain or a layer 0 or layer 1 ecosystem, but it's actually a Dapp ecosystem. And I've picked this because of its difference. So as I mentioned, the layer 1s, the layer 0s, they're going to want wallets. They're going to want exchanges. They're going to want on-ramps. They're going to want media partners. But then along comes a normal developer and they want to build a game or a Dapp or whatever. They don't have to worry about the on-ramp. They don't have to worry about the exchange for these coins because the base layer has kind of taken care of all of that. Okay, so dApps can come along and not have to worry about building an ecosystem. They can just build a project. Okay, but there's one particular organization that I've come across that is started as a Dapp project, and they've now scaled to a Dapp ecosystem. Okay, and this project started, and I'm going to share it now here, as a project called LeoFinance. And LeoFinance is a community token. It's a community token built on the Hive blockchain. And it allows anybody from the crypto community to come along and to engage and interact and write posts and respond to posts and belong to a community and be rewarded for the same because it's a community token. Now, the guy that built this, he's a pretty neat guy, and he'd been working on this on its own for about 2 years before he started to branch out. And what he started to branch out with was, first of all, he wanted to bridge to the Ether blockchain because this was on the Hive blockchain, and he felt there wasn't enough liquidity on Hive and that he'd like to build a bridge. So his next project from LeoFinance was a Leo Ether bridge. So you can now take the Leo smart contract token that's on the Hive ecosystem, and you can bridge that over to ETH, and you can buy and sell it on Uniswap and do things with it on Uniswap. So that was his first cross-platform application, and that is still just a Dapp. Okay, it's not a blockchain, it's not anything else. Okay, it just bridges two blockchains together. That got him into the DeFi space a little bit, because having a bridge means you have to have pools, and these need to be able to be balanced and stuff like that. So that brought him into the DeFi space as DeFi was starting to take off last year. And the first DeFi product that he launched was a product called Cub Finance. And the idea of Cub Finance was to actually give more value to the Leo token, because you couldn't stake the Leo token anywhere and you couldn't earn any additional rewards for holding it. So the tokenomics basically initially said, well, you can earn this token for being part of the community, but there was no reason to hold it. You couldn't get any APY anywhere. You couldn't do anything with it. So he wanted to build a new layer to provide value for the Leo token. So he set up Cub Finance. And Cub Finance is on the Binance Smart Chain. So he has now evolved onto a new chain. And by moving onto the Binance Smart Chain, he needed to build a bridge from Hive to Binance. And what you could then do is actually stake Leo in one of his farms and earn rewards on it. Now, it uses all the other techniques, and I know we haven't covered DeFi yet, and we will do at a later stage. He uses all the other techniques that DeFi uses. So you've got your farms, you've got your liquidity pools, you've got one-sided pools, you've got two-sided pools, but you can stake Leo. So he's now added additional value to his community on LeoFinance. He's given them a reason to explore another blockchain, and he's adding value for the Leo token initially. In addition to that part of it, adding value to the Leo token, by holding the Leo token, when he launched Cub was launched as a new token, and everybody holding LeoFinance was airdropped. So there was another initiative for people to hold LeoFinance so they could actually get that airdrop, and the airdrop worked out quite substantial. So Cub has been running for about a year. Personally, I use Cub. Okay, but this is absolutely no investment advice, and unless you know what you're doing with farming and stuff, I wouldn't be just jumping in. Okay, but Binance Smart Chain again is one single chain, and he wanted to build a stack. So to add more value again to his base app, which is LeoFinance, and now his second app, he's built a third app, and this is fairly much like Cub Finance, but it is over on Polygon, and this is called Polycub. Now, with Polycub, in order to get set up on Polycub at the start, again, there was an airdrop. So the airdrop, you had to be holding LeoFinance and you had to be holding Cub, and that has then increased the value of both LeoFinance and of Cub. Okay, so he has that airdrop going. That airdrop is actually currently going because Polycub only went live there about 2 weeks ago. Okay, now he plans on adding further value. So now you can stake your wrapped Leo or your Leo from LeoFinance. You can stake this on the Binance Smart Chain and you can earn rewards on the Binance Smart Chain. You can stake it on Polygon and you can earn rewards for staking it on Polygon. You can actually also stake Cub now over on Polycub as well as the Polycub token. Now, it doesn't stop here. This isn't all he's built, or well, at the moment, this is all he's built, but I know he's working on a whole stack, and he plans on having a full stack that at each layer, it's adding additional finance to the community token of LeoFinance. And the next layer, he's going to have a Solana Cub, and then he's going to have an Avalanche Cub, and he's slowly going to expand out onto all of the blockchains, and he's going to have a bridge from each one of, or to each one of these blockchains from his own LeoFinance website. So he's managed to build an entire ecosystem at each stage, adding value to his initial community token and the community that have held and have supported. Whereas when the token was issued initially, there was no mechanism to hold. There was no reason to hold. I know people that have got the Polycub airdrop that have earned over 100,000 in the Polycub airdrop alone. And they are buying Cub now and Leo now, saying this next airdrop for the next one, although it might be in 6 months, that they've learned from this one, the value that he's creating by building a stack like this, that they're now prepared to really hold LeoFinance. So that is really it. I'm going to stop sharing there and see if anybody has any questions on any of that. It's a very different ecosystem because it's not built on it's not a blockchain ecosystem, it's a Dapp ecosystem. And it is very different to the ones that you're going to be looking at in the self-study material. So any questions for either myself, Simon, or David on what we went through this evening? Yous are all either scared or we were just so good. You don't need to ask anything.
No, thank you very much, everybody, for the presentations. Just on the Leo Cub, got a question on that. How do you actually purchase Leo Cub, or do you have to put funds into the finance first, or?
No, you can. You can purchase all of them. So you can. So the initial Leo, you can purchase on. Where can you purchase that now? On Ether, so that's Uniswap on Ether. Okay, Polycub you can buy on Polygon, so any of the exchanges there on Polygon, and Cub itself you can buy on the Binance Smart Chain.
So you just literally just swap once you got like Polygon, you can swap it for.
Yeah, if you have a bit of Matic, you can just swap it. Yeah.
Okay.
Yeah.
Understand.
But you can earn it. So you can actually write a blog post on LeoFinance, okay, because it's a community type website, okay, and you can earn rewards for that blog post. You can then take them and go ahead and stake it in one of their DeFi products and then earn their DeFi token.
Okay.
Without having ever spent a penny.
Is it worth signing up for the LeoFinance first, or just do swaps?
It's worth exploring LeoFinance. The LeoFinance community is a crypto community. 99.9% of the blog posts you'll find on there are all about crypto. You can find really, really good information. I get a lot of news sources from there. So in terms of a community side, I definitely recommend you explore it anyway. Not everybody is a content creator, so not everybody is going to be able to blog and earn money. I understand that. But there is an opportunity for people that can create content to produce their own content around the crypto sphere, post it in there, earn from it, and then stake them earnings and have passive income from that.
Thank you so much.
Question in the chat for you there, Paula. Celia asks, what type of subject do they accept? Is the blog posts about? Is it crypto only?
Yeah, mostly on LeoFinance because it's a crypto community. It's the crypto posts that will get rewarded. There are other social media websites, and we'd be looking at that in the section on Web3. But there are other social media websites that you can use that are open to all types of content. You can also build a community and tokenize it yourself around the topic that you like. But again, that's more Web3 that we'll be talking about later on in the expert track. Any other questions? No, well, that works out perfect because it's just about time anyway. So what I'd say to you all now is taking on board what we've gone through this evening. Go through the self-study material, make sure you're hooked up for one of the study groups as well that are happening over the next 2 weeks on the content. And then we'll be back next Monday. Next Monday, we'll be having a peer review session. We'll be doing our breakout rooms as well. And we'll be setting the little projects for you to do in the breakout rooms next Monday. So it should be a little bit of fun and a little bit of challenge at the same time. So that's it then. Take it easy, everybody, and I will see you all next week. Thank you very much for coming.
See you all next week. Have a good one.
Take
See
care,
you,
Wayne.
Wayne.
Bye.
Thank you.
Yeah.
Take
Take
care.
it easy. Bye, Celia. Bye, Alex.
Thanks.
Cheers.
Bye, Ronan.
Bye. Thank
Bye,
you.
Jacinta
Bye.
and Rob.
Bye.
See you,
See you,
Mark.
Jacinta.
Bye.
See you, Alex.
See you, Ian. See you, Alex.